All right, oops, orientation is locked. All right, my friends, give me a quick one here today. Just figured out when I'm out here doing some grilling, just got some sliders on, nothing fancy, we're doing some grilling. I want to talk a little bit about the tax reform bill, that the Trump tax bill, TCJA, the Tax Cut and Jobs Act that was passed in 2017. And we're hearing lots of people say, the Tax Cut and Jobs Act, I haven't got refunds like I should have. And all this, I'm just telling you, man, it's such... So you're not going to get a refund if you haven't paid taxes, other than if you have a child refundable tax credit. You're just not going to. And so what happens with tax refunds? If you don't pay taxes, there is nothing to refund. And so I don't understand all these people are sitting there saying, I'm getting a less of a tax refund than did the previous years. You either A, you had less withheld, or you didn't pay enough in taxes to get the refund to begin with. I don't understand why this is so complicated. And I'm hearing the need, and I know why the media is doing it. The media is doing it like crazy because they wanted to bag on the Trump tax bill. I get that. I know what's going on there. But if you don't pay the taxes, you don't get the refund. Remember, a refund is just you're getting money back from your overpaying the tax. Let me give you an example. Had a guy post just a few minutes ago on my YouTube channel. He got $9,000 back in 2017, and he got $4 back in 2018. All right. What could have possibly changed? Well, it turns out in 2018, he took a $15,000 distribution from his IRA, which he did not do in 2017. Thus, he feels he was essentially robbed of $5,000. Essentially, the Trump tax bill, I'm sure is what he's thinking, cost him $5,000. And the first thing that comes to mind is say, did you have any withholding? If you didn't have any withholding, you're not getting, that $15,000 has yet to be taxed. You haven't paid any tax on it. So I can almost assure you there was no withholding. And so if there's no withholding, or if there wasn't enough, and so if you think about it, if you're married filing jointly and you have, I don't know, I think he said $6,000 of IRA distributions, on top of that you got $15,000 lump sum distribution. That's $21,000 of distributions right there. And we'll just say between he and his wife, he has $40,000 of Social Security. All right, so we take half of Social Security, we take the $21,000 of IRA that gives us our provisional income. So half of Social Security was $20,000 bucks, $21,000 of IRA distributions. Our provisional income is 20 plus 21, $41,000. Married filing jointly, that means $41,000 minus 34 is $7,000. All right, we take half of that. So $3,500 of our Social Security is subject to taxation, plus the $21,000 that we have in terms of the IRA distributions. So right there is zero. Now, because we have that'd be roughly $24,500 of AGI. You take out your standard deductions and you have no taxable income. All right, so that's the first thing you got to figure out if your tax bill is wrong. What is your AGI relative to your standard deductions? And that will give you your taxable income. So in this case, if that's all the income he had, was that $21,000 IRA distribution plus $40,000 of Social Security, he has no taxable income. We can figure that out just literally, I just did right there. So my next question is, what's the other income sources that you have? Are there other income sources? Is the Social Security only $40,000? Do you have required minimum distributions? Do you have pensions? Do you have this, that, and the other? And the answer is going to be yes, because there's no other way you're paying tax on if you only have $24,500 of taxable income. Not if you are over 65 years old. And the reason for that is because your standard deductions are $26,000, right? Actually, this year is $27,000. All right, so look, I'm not here to defend the tax bill. I love it. I am here. I guess I would be here to defend the tax bill because I think it's fantastic. It simplifies it immensely simply by saying we are going to have this higher standard deductions. That way people don't need to get so uptight about, I need to itemize this or deduct that. Forget all that. Just make it simple, man. Say, look, you made $100,000 bucks. You got $24,000 of standard deductions. Your taxable income is $76,000. The first $19,000 of that is taxed at 10%. The next amount between $19,000 and $76,000 is taxed at 12%. Done. Send a check. Simple as pie. Easy as pie. 90 to 95% of taxpayers will be in that tax threshold. They don't have to spend big bucks on a CPA. They don't have to spend big bucks trying to figure out all their itemization, going to Goodwill and keeping these little cards that they give you. I need to take off the 150 bucks. Nah, forget all that. It's crazy. It's not worth the time and effort to save $50 in taxes. So keep it simple, and make it clean and as crisp as you possibly can. If you have Schedule C income, Schedule B income, Schedule D income, that's different. Hell, heaven forbid you got K1 income. But if you just are a simple taxpayer, a husband, wife, and Social Security with other sources of income, it's so easy to figure out your tax burden. But the problem is, what if you don't actually look at your 1040? Then you're not going to know. So you got to look at your 1040. What are your income sources? Wages, taxable interest, qualified dividends, long-term capital gains, short-term capital gains, Social Security, pensions, and all that stuff. What are your wages? What is all the other source of income? Add all those suckers up, and then you got to figure out your provisional income from Social Security. Again, that will all be on the first page, well, I guess the second page now of your 1040. You can figure it all out, man, and then you say, okay, subtract your standard deduction. That's your taxes due. How much have you paid? If your taxes due are $10,000 and you only paid $8,000, you're going to owe $2,000. Has nothing to do with Trump. Has nothing to do with him. If your tax bill was $10,000 and you paid $12,000, you're going to get a $2,000 refund. Has nothing to do with Trump. Nothing whatsoever. Has nothing to do with Obama either. It's just the nature of the tax code. So don't let all these guys get all you stressed out about the stupid tax bill. The tax bill is a benefit for the vast majority of Americans. Where I think it's funny, actually, is a lot of these people, I'm just putting these sliders. You know, these aren't anything. I'm not a big fan of sliders, actually. This is easy to make for my kids. They're up at tennis practice right now. But actually, that's not going to be that much meat right there. Oof, that's not going to be enough. Yikes. Anyway. The issue is that comes down to it, of course, is that they don't like a lot of people don't like the tax code simply because it simplifies it, takes a lot of people off the rolls, and there's less charitable deductions, and the people in the media complex love charitable deductions with giving away to schools, giving away to education establishments and whatnot. And when the facts is less and less people are actually charitably inclined if they get less of a deduction, that hurts the bottom lines of the Harvards and things like that, and they don't like that. The irony of it is, I was just reading this paper literally yesterday, and I'll read it some more tonight and probably report on it in the next couple of days. When it comes to actual charitable deductions, the religious among us don't take the charitable deduction. It's not the charitable deductions doesn't drive the religious giving. It doesn't. It's actually what drives giving for religious people is the giving, absolutely. And that's, Jews, Muslims, Christians, the whole thing. What drives non-religious giving, though, is charitable deductions that they get. And it's just interesting. I'll report back on that because I found that was a very, very interesting paper I was reading. Hey, that's it. Don't blame the tax code. Look at your 1040. Look at what your AGI is. Look at your provisional income. And then, of course, look at the end of the day, what your taxable income is. How much is your taxable income? How much is your tax? Let that tax be what determines how much you owe. If you haven't paid enough because you haven't had enough withheld, that's on you. You got to pay it. And if you paid it and you paid too much, you'll get some back. It's literally that simple. All right, hope this helps. We'll see you guys later. Thanks now.